everybody. This is the Bitcoin Beast talking at you. This is my first video in a series of videos that I hope to put out, and if it goes well, I'll keep producing them. Doing this just to help other traders out, other finance enthusiasts, things like that, and try to explain this complicated finance world in easy to understand layman's terms. And the first 4 videos I'm going to talk about is trading. We're going to get right into the nitty-gritty. Not going to go into a whole lot of technical analysis. I'm just going to show you how real traders trade. It's not that difficult once you understand the basic concepts of it. So let's get right to it. There are basically 4 different types of trading. There are different types of trades that you take. And the first one that I'm going to talk about today in this video is called the fade. And what the fade is when price goes up rapidly or down really rapidly, like really super fast, like some news event, some type of catalyst that drove price in one direction or another, way out of balance. And there's a few terms that you do need to know in order to understand it. There is some technical indicators, but I'll go into that, why most technical indicators will tell you basically the same things. But the first technical indicator we're going to look at is called VWAP. VWAP is the abbreviation for volume weighted average price, which is a technical analysis tool that shows the ratio of an asset's price to its total trade volume. It provides traders and investors with a measure of a given average price at which the stock is traded over a given period of time. Now, what's different in the VWAP compared to other moving averages is that it resets in every period that you set it at. And in the examples that I give, I'd have a weekly VWAP and a daily VWAP in this example of using VWAP as far as how useful it is for trading. The second is called the standard deviation. Now, the standard deviation is a measure of how dispersed the data is in relation to the mean or the average. Low or small standard deviation indicates data are clustered tightly around the mean. That means that there's a lot of data points right there. There's a lot of different, everything's real close to the data, so things are very certain that it's going to stay there. And a high or large standard deviation indicates data are more spread out. So that means that as price moves away from the VWAP or the moving average, that's the average price of the day or the week. The higher it goes, the higher the standard deviation it goes. The same if it goes lower. The lower it goes, the higher the standard deviation is. Standard deviation is not price dependent. It doesn't depend on price. It doesn't care which way it goes. It cares about how far it gets away from the mean. So it's real important to understand that. A good example, like here, if you took a handful of sand and just dribbled it into a pile on a table on a nice flat even surface, it would disperse itself out into something like this, where the average, you've seen the memes out there, the mids, and then you got the dumb side, and then the genius side over here, and then you got the mids over here screaming. So the dumbasses and the geniuses tell you to buy Bitcoin. The mids sit there and scream at you that Bitcoin's this, Bitcoin's that. And I don't want to get too far into that, but that's basically, when you get out to these edges, that's where your standard deviation is the greatest. And with price, let's go ahead and go to the chart. With price, these are standard deviation bars here. This white line is the daily VWAP, and this yellow dotted line here is the weekly. Now I got a bunch of other lines here. Let me go ahead and turn these off. You don't really need these for this discussion. We don't need that one, and we don't need the volume profile. We're just looking at standard deviation. So we have the VWAP, the yellow line, yellow dotted line is the weekly, and the daily dotted, or the white dotted line is the daily. If you go back here, you'll see that it was anchored. Yesterday was a really good day. It showed you all the trades, which you see is anchored to the prior day. And here's the prior day. So it expands out as the day goes on. This is a slow period of time. What I like about this is it gives me the highs and the lows of the overnight session. So when I get into the daily session, those levels become important. But that's not important to this discussion right here. So I see that they expand out as we get more and more data, more and more candles to tell us which way price is going and how far it needs to go away and when it hits the mean. Now, I colored these bands. We get to the shaded band. That's the third standard deviation. That's where you want to take your trade. You want to take the trade in the opposite direction. So it's like a rubber band. We go like, here's the mean, here's the daily mean. And then price decided to move away, move away, move away, move away. And then it gets here. It's very hard to get past that third standard deviation. And so you can take a trade here. It's a very high probability trade that it's going to work out. Now you have to remember it'll end up going back to the average, but the average will rise up to meet it eventually. So we want to get out at about 50% level. And this is a very high probability trade, and we're going to put our stop right here at the fourth standard deviation. So we put the trade in there, and you try to get it right to the pip if you can, and then, or the tick, and then you take a 50% cut. When it gets down to that 50% level, you take profit. Really that simple, and you can drag your stop down, stuff like that. This is day trading. This is how it works. Just looking for those high probability setups. Now, we could go, because the North American session, the New York session, hadn't opened yet. It opens at 9:30 Eastern time. You can see the candles start getting a lot bigger once, because there's more money sloshing around. So the standard deviation has to go and get wider, and it gets real wide. Now, because we got more money sloshing around, we need to not only look at the daily, we also want to look at the weekly VWAP. And that's anchored all the way back. I can just go back to the daily real quick. Oops. It's not going to give me what I want. Where'd it go? Let me go back to here. Yeah, it's not going to give me what I want right away, but these bigger bands here, these bright, thick bands, these are the standard deviations off the weekly. And that goes all the way back to last Sunday. And I have to re-anchor that every Sunday. So these standard deviations are much wider, so we can get a higher time frame, a higher bird's eye view of perspective of what's going on. But it goes all the way back to the last Sunday, but I'm not going to go that far. Let's just take it back to where we were. But yeah, that's what you have to understand. This is the VWAP. This is the average for the week. This is the first standard deviation. The green up here, green dots and the red dots. Then we have right here the green and red, that's second, and then the bright, that's the third. We get third here. That's almost a guaranteed money trade right there. That's like 95% if we ever hit that. And for big money, big gains. But it's rare that it gets like that. But because there's more money coming in here, that means the volatility is greater here, and it was very early during the day. So this fourth level, this fourth standard deviation, we hit the third standard deviation here, but look how much further we went down. It just rode that third standard deviation all the way down. So now we have to look for the first standard deviation. We got a trade. We got a trade signal. But now we have to look for that first standard deviation for the weekly. Now we got something. Now we're in here. So now let's go and take a look here. Boom. There's our trade right there. That's your actual trade. And then here's your stop down here. So we take the trade. Boom. Climbs right back up. You can take it about 50%, which would be here maybe. Maybe you held for a little bit longer, was able to get it all the way up back to the average, back to the daily average. 50% is a safe bet. 50% of whatever the leg was. You get back up to 50%. That's a good high quality trade right there. Scalping. We're looking for base hits. We're not looking for home runs and to hold it forever, because we want to be out before the end of the day. So what happens at the end of the day, it's called the murder algo. A lot of people have their positions and they keep a hold of it, particularly retail, but a lot of different positions. And what they have bots and algos that'll go and scoop up all this liquidity. They'll buy and sell trades through micro trading, through huge processors that trade thousands of trades per second. You know, faster than you and I could ever trade. And then they get into these trends to mop up the liquidity at the end of the day. Now, we would have been lucky if we would have held all the way through, but more than likely you're going to get chopped up in here. So usually you want to be out of the market by 2 o'clock. If you're not out of the market by 2 o'clock, damn sure you're out by 3, because then murder algo takes over at 3 o'clock, 3 to 4, and you could get eaten alive. It could make you a lot of money, but you can also lose you a lot of money too, because there's a lot of slippage, a lot of things going on, a lot of games, a lot of algo games playing. So that is the fade, and it is the most probable trade where you're actually going to take profit. The probabilities are in the 80s. There's no other trade that does that. Everything else is 75 and below. And so this is the highest, most probable trade that you can take. And you know, when you combine the two standard deviations, now you really got something. You know you're in a good trade when you're taking a look at both of those standard deviations. And there's other ways to take profit to stuff like that, but the 50% rule is golden. You get in, you get out, because you don't want to get caught in that murder algo at the end of the day. So that's it for the fade. Hope you enjoy these videos, and if I get a little bit of a following, that's great. If not, at least I got to entertain myself for an hour or so. So that's it. You have a good day.